Welcome to the JD Power Insurance Intelligence Podcast. I'm Michael Vermillion with JD Power. With me today are Mark Garrett. Mark heads up the claims research at JD Power. Mark, welcome.
Yeah, hey, good to be here, Mike.
We also have Craig Martin. Craig joined our insurance practice kind of late in the year last year. Craig heads up our agent practice, also heads up our research for the life and annuity industry. So, Craig, thanks for joining.
Oh, my pleasure. Great to be here.
And finally, last but not least, Steve Crewdson. Steve heads up the our research for shopping and servicing for PNC Insurance as well as some other things. Steve, welcome.
Yeah, thanks, Mike. Glad to be back.
So this is our 2025 Outlook slash prediction show. Before we get into it, I think we should have just kind of addressed the elephant in the room, and that's the wildfires in Southern California. I'm personally based here in Los Angeles, and we're okay. Our house is okay. We've suffered some inconvenience due to power outages and that kind of thing, but nothing like the kind of devastating conditions and the things that have happened in the Palisades and in Altadena. So certainly our thoughts are with those people and those families, and Los Angeles has a big rebuilding effort in front of it. Before we kind of dive into our outlook for the year, I just wanted to get the panel's point of view on the impact of the Southern California fires on the insurance industry in general. Is this going to make a dent or have a big impact on the industry, and or is it going to be kind of minor because it's covered by reinsurance?
Yeah, I'll jump in there, Mike. I think every day the numbers are increasing, right? But the latest I've seen is at least 250 billion of damage, maybe 30 billion of that is insured. So the big part of that is when you hear numbers around 250 billion of damage, it doesn't mean all of that is going to come out of insurers' pockets or reinsurers' pockets. Not all of that damage is insured property. But if you think about a $30 billion event, yeah, that's the industry has sufficient capital to cover that. I don't think it's going to make a big dent. I think it's just going to continue the trend that we've seen over the last couple of years of in the home market. The hard market will persist now even longer. So in auto lines, we're seeing the hard market kind of give way to a softer market. We're seeing definitely lower premium increases than we saw a year ago, even 6 months ago. In other words, the market is softening. Some of the underlying cost drivers in the auto space have come back down. But this is just another sign that that's going to be a longer tail on the home side of things, that the hard market is going to persist for quite a bit longer here in home policies.
Yeah, and it certainly has an impact just from an operational standpoint of the insurance companies too, just responding to the large influx of claims and just mobilizing the all their resources to get out there and respond to that. I mean, it's certainly going to stress the system. And it's a worrying trend that we're seeing, though, as Steve mentioned, like these events are happening more and more. I want to say what I just 24, I think, had $27 billion events. The record was in 23 at 28 events. So, I mean, back to back, these are both some of the highest, incidents we've seen of just these volatile weather events coming in and having, over $1 billion in damage. So this seems to be the new norm in the last 4 or 5 years now, unfortunately.
Yeah, and I would just comment, that this just reinforces. I mean, this is a challenging situation. It's a personal thing, and so the importance of the agent, the importance of the people who are serving and taking care of folks is so critical. So this just becomes, it's kind of a make or break moment in many ways for those individuals. How you treat them, how you handle them, and support them. And I think that's just vitally important as well.
Yeah, so just a quick follow up then. I think one of the concerns here in Southern California is that the value of property and real estate it's so high, so expensive. You kind of combine that with the fact that we've got 12,000 structures that have been destroyed. So there's going to be a lot of rebuilding happening at the same time, which means kind of a surge in demand for contractors and materials and probably a natural outcome of that will be just higher prices in general. So will insurance, will property insurance cover the homeowners that need to rebuild, or are we going to see some shortfalls? This is just a question that we're seeing in the media. where there's just not a lot of knowledge and understanding of how insurance works. So perhaps we can help here.
Yeah, one thing to keep in mind is that fire is a covered peril under pretty much anybody's HO3, their homeowner's insurance policy. So the fires that are happening are covered perils. These are covered losses in most cases. In terms of surge pricing, many insurers offer endorsements or maybe even to their base homeowners policy and the option of surge pricing. So with the, as Mark talked about, the multi-year trend now of billion-dollar events, insurers are more frequently facing claims events where normal pricing doesn't apply, right? So because there's so much damage in such a concentrated area, whether it be a windstorm or a hailstorm or in this case a wildfire, insurers have been taking that into account and offering customers options around that. So many customers will find that they do have a policy that will cover that surge pricing to an extent and will be made whole during this experience.
Yeah, Mark, do you have any thoughts from a claims perspective?
Well, it's just, from, Steve, I think Steve covered it well. It's a lot of times, as you mentioned, though, it could be an endorsement, something that you're separately purchasing on your policy. So if you don't have that, then you may, there may be some out of pocket costs if materials are hard to get and prices are going up for some of these replacement costs. It's not automatic that's usually covered.
Yeah, just one more follow up that's kind of popped in my head. Another question I heard this morning was, and they're kind of running this Q&A on the news. Like one of the questions was, if my house burned down, do I have to pay the mortgage? And then if I had to go rent another house, is that somehow covered, or do I have to pay that as well? And then I think probably the third question was, if my house burned down, do I still have to pay my insurance premium?
Yeah, to those questions, all the answers are yes. So yes, you do have to continue to pay your mortgage. Yes, your insurance, if you have a homeowner's policy that covered this loss, your homeowner's policy covers loss of use of your dwelling. So they will reimburse you up to a point for you to find new accommodations while your home is being repaired or replaced. And then lastly, of course, you want to maintain your homeowner's policy coverage, so you will want to continue to pay your premiums on your homeowner's policy. You will want to, as Craig might address, you will want to talk to your agent or talk to somebody at your insurer about your insurance needs given this situation you're in, especially if it's going to take what might be a very extended period of time to get your house repaired or rebuilt. But you don't need to worry about if you have coverage that applies to the situation, your claim is being covered. You will be reimbursed up to the terms of your policy for your loss of use of your home and finding alternative accommodations. But make sure you continue to pay your mortgage. You still have a loan on that property. Yes.
Okay, great. All right, thanks, guys. So let's move on and start looking out onto 2025. So forgot to say Happy New Year and welcome back both to our panel and to our audience. So looking, coming out of 24, going into 25, Steve, why don't we start on the shopping side of things? What do we expect to happen with insurance shopping in 25?
Yeah, good question. We've just recently did an analysis. We're getting ready to publish our Q4 list report and looked at the effect that rate taking has on shopping and switching. And the expected pattern has really developed over the last couple of years where I think we may even mentioned before in a previous podcast that as rates were going up at setting new historic standards for rate taking over the last basically 3 years now, consumers were dipping their toes into shopping. So the first half of 23 and the first half of 24, even in the first half of 22, they went into the market, shopped. So we saw increasing shopping rates. But they found that basically all insurers were increasing their rates, and so premiums were not really competitive. It's the classic signal of a hard market, and therefore they were shopping a lot but not able to switch. So in the second half of 23, they really took a vacation from shopping. Shopping rates fell down because they had tried. They found that they couldn't find a more competitive premium, so they stayed with their insurer. This year, however, we saw an uptick again in the first half of 24. And then it got even higher at the end of the year. So as rate increases started to taper off, consumers were finding some competitors of their current insurer who did offer a lower premium, and therefore they switched. So word was spreading that I didn't just shop, but maybe telling your friends, family, colleagues, but I also was able to switch because I found a lower premium. So we saw in the second half of this past year a reversal of the trend over the last couple of years where shopping had gone down after people had tried. Now they're finding that I can switch, and they are switching. So we have about 2 years, maybe 2.5 years of pent up demand to switch insurers with all this rate taking that's been going on. So we'd expect here in early 25 to see a continuation of elevated shopping, elevated switching. All the signals thus far for rate activity in the first half of this year for, again, auto insurance, we're talking auto insurance at the moment, are to see those rate increases cool down. Homeowners will be a very different story from everything we can see right now. Homeowners insurance, the hard market, as we discussed a moment ago, looks like it's going to persist. So the shopping trends there won't be as clear what's going to happen into 25. We're likely going to see some shopping, but maybe not as much switching like we saw on the auto side over the last couple of years, because the competitiveness won't be there across carriers as much as it will be on the auto side of the house.
Thanks, Steve. So this actually might be a good time to pitch the fact that we're developing as a team here, just kind of anticipating this higher level switching behavior. We're going to be publishing a customer retention playbook for the P&C industry, and having a webinar that focuses on that topic a little bit later this month. So just a quick advertisement for that. Steve, looks like you also have a prediction here around usage-based insurance. So what do we expect to happen in 25 with UBI?
Yeah, with UBI, our 24 insurance shopping study showed a very interesting break in the longer-term trend of year over year over year for going on at least a half dozen years. Insurers were each year offering UBI to more shoppers than they had the year before. So they were pushing the message out to the marketplace. You should take a trial of UBI, see if it works for you, see if you're a better driver than most, and you can get a discount. In our 24 study, we saw that rate at which consumers were being offered UBI when they were out shopping just fell off a cliff. So it went from, in our 23 study, almost a quarter of shoppers, 22%, telling us, when I went and got a quote, the insurer offered me UBI. In our 24 study, that fell to 15%. But so you might expect, well, fewer people that were shopping will have signed up for UBI then because fewer offers were made. No, this year was the first year where we saw more shoppers telling us that they signed up for UBI and received a discount on their UBI than were actually offered by their insurer. So in other words, we saw 19% say, I bought a new policy, I signed up for UBI with that policy, and I received a discount on UBI on my policy through UBI. That's 19%, when only 15% were offered UBI. Every other year, more people were being offered it than were signing up for it and getting a discount. This year, I think the best way to characterize it is the customer took the reins on UBI. They have the demand for UBI. They're now leading the insurer to the UBI conversation, whereas for the entire history leading up to this past year, the insurer had to lead the customer to the UBI conversation. But now we've hit that kind of critical mass of interest among consumers around UBI, and they're now leading the insurer to, I want UBI, versus having to be kind of led into it. So if that continues, and we suspect it will, we have some early results that, yes, UBI interest is staying pretty strong into early 25 here. We should see more and more consumers asking their insurers about UBI when they're getting quotes, perhaps reaching out to their agent for their current insurer. So maybe they don't want to shop, but just check in with their current insurer that, hey, do you offer UBI? How can I get onto a UBI program? Because again, we're all kind of getting more accustomed to we're being tracked when we're driving, where our phones are watching us anyway, they're listening to us anyway. Why not save some money on my insurance, especially if I've seen my premiums go up 30, 40, 50% or more in the last 3 years? If I can get a 10 or 15% discount by just letting them watch as how I drive, then a lot of consumers are starting to say, I'm willing to do that. I want the savings.
Great. Thanks, Steve. Mark, why don't we move over to claims? So what is your outlook for claims for 25 and any predictions?
Yeah, I'd say the one thing that I imagine we'll just continue to see is that last year, or the last couple of years, have really seen a lot of heavy investment into digital processes in the claim space. We've seen a lot of heavy investment in apps. really building out features and functionalities there. I think the big challenge for the industry is just getting people to, download the app, to have the app, to, get over that burden, I guess it is that burden of people not wanting more things on their phones and more apps, But we find that, carriers who are building more functionality can be successful at getting people into the app. I mean, we see right now in space, we see brands that have nobody reporting the claim in the app, all the way up to almost 30% in some insurance carriers. So it can be a real key advantage. Really building out functionalities where you can, they're showing you all your policy coverages. They're letting you pick a body shop, showing you maps to overlay to find a shop close to you. I mean, a lot of functionality that can't necessarily happen on a phone, or it's so much information you're getting, you may forget some of the stuff. So we see the apps really becoming a pivotal piece where we're seeing higher satisfaction, now than calling somebody because of this added functionality and pulling in, external information. Steve mentioned UBI. That can be a key piece to like starting off that claim process. So I'd say we're going to continue to see that. When we talk to carriers, we still see testing out different ways to continue to roll out AI into the process. I think one of the areas that's on a lot of people's roadmaps is just getting it to start providing some service, right? Developing some AI chatbots, some ways to interact and provide customer updates. I mean, we've seen, inbound servicing volumes actually go up. So despite all this success of digital and getting people into these channels, I mean, a lot of carriers are telling us they're still seeing more kind of inbound calls on servicing claims. So I think there's some work to do in getting people into these channels, but I imagine that momentum's not slowing down, I guess, is what we'll continue to see heavy investment there and getting people into those channels.
And Mark, maybe if I can add another plug, I think we're bringing back the JD Power Claims Conference this fall,
Yeah.
right? You'll be heading that up?
Yeah, excited to bring that back. We ran that for a good, I think, 7-8 years or so. Had a nice track record there. Had a couple years off, so excited to bring that back into the fall around our claim study release.
Terrific. Thanks, Mark. So Craig, looking at 25 for agents, what do we have in terms of an outlook and any predictions?
Yeah, I mean, I think building on both what Steve and Mark have talked about, the importance of the agent is really just going to continue to increase. We see that, in shopping and selection, agents have a huge influence, and consumers want to work with agents. And I think, all these scenarios and situations we've talked about are the reasons why. There's a lot of unknowns, a lot of questions. People aren't experts in insurance. They want to work with an expert. So the importance of having that expertise and that personal connection. And then when something happens, you want help, you want guidance. And so I think we definitely see the impact and importance of that. And then things like education. How do I teach people about capabilities we have, whether it's an app, different offerings that are out there, products, services, usage-based insurance, all those things really can flow through the agent. So we definitely see the critical importance and impact that an agent can have on the situation. But I think we're also hearing through our independent agent study that a lot of them are not being prepared. And they need help. They want help. So there's this kind of disconnect in that the agents are crucially important, but they need help, they want support, particularly when it comes to not just tell me what the product is. And I think that's traditionally where a lot of the education and training goes. It's about teach me about the product or the service. They actually want help on how do I take care of my clients, because they recognize in many cases the most crucial thing they're going to do is work with that client on a day-to-day basis, whether it's helping them pick a policy, make changes to their policy, or run into a claim. So, we definitely are seeing that the importance of training around things like customer experience and understanding what's important to a consumer, why are they engaging, and then even kind of critical best practices like proactive discussions about, hey, what's happening to your policy? What are the rate changes? Those are all critical moments of truth, and helping them know what to talk about, when to talk about it. All those are vital. So, we see that as a big opportunity for firms to differentiate and separate themselves in the marketplace with that focus on the agent.
Thanks, Craig. Some more to come on training, I suppose, right?
Absolutely. Yeah. We are spending a lot of focus and time on that concept and actually working on standing up an agent training solution, agent university, so to speak. So more to come on that front in the coming days.
Okay, thanks so much. So just in terms of what we have coming up for the insurance industry from JD Power for 2025, you'll be able to find this information on the events page on our website. But we do have a couple of webinars coming up at the end of the month. One around the use of predictive analytics for prospecting and acquisition of customers, and then we'll have a second one focused on the customer retention playbook. In addition to that, we've got we're bringing our customer advisory board back this time in April, a little bit earlier in the year. So if you're a JD Power client and a subscriber, look for that invitation. That same week, we're actually launching a new conference for around AI. So it's called the JD Power AI and Insurance Conference. That will be open to everyone. That will be in Chicago on April 9th. We'll include a link to the website in the notes and our events page. And that's coming together very nicely. Very excited about that one. And then, as we spoke about earlier, Mark Garrett and team will be bringing back the JD Power Claims Conference in October. I think that's also in Chicago, Mark. And we'll have more information on our website. So, Mark, Craig, Steve, thanks so much for joining us today.
Happy to be here.
Pleasure.
Yeah, and we want to thank our producers, Carolyn and Dan, as well. And we want to thank you, the audience, for joining us once again. And we'll see you next time.